yeah, I'm just going to be over there. All right, good evening, class. Welcome to the final day of the first week of real estate finance. Thank God, we're almost done. We're almost halfway done. So let's get to talking today, and try to get you out of here semi-quick. Yeah, so today we'll be talking about Chapter 5, sources of funds, institutional, non-institutional, and other lenders. One second, I'm going to unlock this door for Vita. It's the same dude that prep agent. Yeah, with the questions. Beneficial. All right, so Chapter 5. You throw me down. All right, so institutional lenders. What are institutional lenders? Well, yesterday, kind of what was the topic of our conversation? Do you remember why?
Yes.
Yes and no?
Yes. Financial support, of course. Damn.
We talked about the. We talked about their names are Fannie Mae, Freddie Mac.
Yeah.
What are those called? What is the general term that we use for those?
Secondary mortgage market.
Yes, exactly. So yesterday we talked about the secondary mortgage market, and those are the investors or the government agencies who would buy those pooled loans sold by, right here, institutional lenders. So today, kind of what we're going to be talking about is the primary mortgage market, who individuals, why you want to go buy a house, you're not going to go, can you go to, say, Biden, President Biden, you say, hey, Jay Turbo, can I get $200,000 for this house? Like, I got a crib out here in Texas, I don't want to buy it. Does it happen like that? No. Unfortunately, we don't have the president's number. If you do, it's pretty sick. Just slide it my way, because I think it'd be cool to just say I have a president's phone number in my phone. But yeah, no, you can't just go to Fannie Mae, Freddie Mac, Ginnie Mae, anybody that we talked about yesterday. You can't go to them and ask specifically for a loan on a house. What you're going to get, where you're going to go are the primary mortgage market, or these institutional lenders. And what's under the institutional lenders? Commercial banks. This is the number one. 90% of transactions that you're going to deal with in gaining a mortgage, people are just going to go to a regular commercial bank. If you think about where would I go to get a loan, almost 100% people think you can only get a loan from a bank, and that's it. Well, that's not true. You can go to mutual savings banks, savings association and thrifts, life insurance companies, pension funds, and credit unions. So yeah, like I said, this is what we consider the primary mortgage market. In talking about these, like I said, commercial banks are the primary lender to the general public. But if you ask most people, hey, I can't get money from a life insurance company. Like, what are they gonna, they only sell life insurance. Well, if you have some specific policy that some companies own, then you can borrow against that policy and that equity and the life insurance that you've already put into it. You can borrow against that, get the money, buy a house. Same thing with pension funds and credit unions. Man, this is a really, really tough lecture, I'll tell you that. I don't know how he got to some of these points that he went into, but we're gonna try to get it. Yeah, pension funds, you can borrow against your retirement in some instances, kind of take some of that retirement out, pay for the house, and then obviously the house, once you gain ownership of it, it becomes an asset of your own as well. Something that you can borrow money against. That don't sound like hard work. There's nobody out there. So yeah, you can borrow against your retirement. And we're just going to kind of talk about the general idea of being a real estate agent. It's not your job when when you take on a new client, it's not your job to either know everything about appraisal like we've talked about. It's not your job to know everything about the inspection process or, how this crack in this wall, is that structural damage? Is that structural or is it just, something cosmetic? That's not our job to fulfill. That's not our duty. We're there to help people buy and sell houses, smooth them through that transaction. We're not in need, and you definitely don't want to be in need of knowing everything about everything. Once you know everything about everything, you tend to start giving out information, advice, those kinds of things, and you can get into some legal trouble there. So, okay. So, we're there to help them buy and sell houses. You're there for your primary reason is to know the housing market, know kind of what's going for, be able to accurately price houses, and just be a genuine person and help them through that transition smoothly. Whereas obviously the lending institutions, do you need to know exactly what credit score a client needs to get a conventional loan? Quiet. I mean, it's good to know a general range. You want to have, about a 640 to a 700, or if you're single, and then if you're married, you can go a little lower because you'll have the combined credit. You want to know the general ideas of everything, but you don't have to know the specifics. You don't have to know, to get a $250,000 loan, you're going to need a credit score of 675 at least, and bring in this much and this much money. And I mean, you don't have to do that. You just need to know the general idea to be able to kind of push your clients in the right direction to those people. As I said, with inspectors, appraisers, it's the same with banks. You want to send them multiple options, and let them kind of shop around and choose who they want. That way, I mean, it makes it look like you're doing a lot more work than you should be doing, and it saves you from liability down the road if somebody doesn't do a good job. Well, hey, I gave you the choice, and that's who you went with. That's not my problem. It's not my fault. Another thing, Justin puts a really big emphasis on lending and being really good friends with your lenders. We have a lender that works with our company quite a bit, Jake, and he's not even in the College Station area. Where's he located?
I think it's a smaller town up north.
Yeah, it's some small town. It's not College Station though, but he's the primary lender kind of through Noble's Realty Group because Justin has built such great rapport with him. Justin can call. I've seen at a moment's notice. Ask Jake, hey, kind of what are the logistics on this loan? What would this and this be? And Jake will drop whatever he's doing, answer the questions. I've been out at dinner with Justin, and I have a question about lending or a question about the loan process, and he was like, well, I don't know. And so it was dinner time. We called Jake. Jake wasn't able to answer. He was actually putting his kids to bed. And once he put his kids to bed, Jake called Justin back and was like, hey, what do you need? So it's really good. You want to have that rapport and that relationship with your lender because there are, unfortunately, a lot of lenders out here who are sleazy and will try to get more money out of you, get more money out of your clients.
Yeah, I know Jake saved my butt a couple times.
Yeah, he's a great dude, and I mean, you can call him at any time. He'll answer. He's a legit dude, and he's there for the well-being of our company and not in it for his own pocketbook. So that's where you really want to be close with your lender. Justin kind of has a saying that you want to be so close to your lender, either you can give him a hug or slap him. You can walk up to him and you can either give them a hug because they're doing such a good job, or you can slap them because they're not and you're upset with them. You want to keep those guys close. We should know.
So how do you save your butt?
Boom.
Well, he saved a deal one time. There was this whole thing with an appraisal, and the appraisal came in crazy, and he saved my butt in there. It's like, oh, we can fix this. Well, he's a good guy. You want to know your lender very well, or at least good enough.
Yeah. You want to be able to shoot him a text, how's it going, and then be able to answer and ask you back. Not only in the case for what's going on? I don't know, we'll just stick with that. Not only in the case that them being greedy and looking out for their own pocketbook, but if you have a lender who's good and works very well, but you come to him one day and one of your transactions, you constantly come at him with $250,000 to $300,000 to $400,000 transactions. Well, of course he's gonna be busting his tail trying to get everything lined up and squared away because he makes 1% off the loan. So, I mean, 1% of 250, 1% of 300,000. Yeah, he's gonna bust his tail to get it done. But when you go to a lender and you have a $10,000 transaction, and he's working with several other multi-$100,000 transactions, just like any real estate agent, he's going to kind of push that loan off to the side. But if you have that relationship with him, obviously, he's going to want to keep you as a friend, keep you as a client, and he's going to stay on top of that loan. I've had multiple loans and multiple transactions. It was a smaller amount of money. The lenders were. I wasn't dealing on the buyer's side, so I didn't have any contact with the lenders. But the opposing agent was not staying in contact, didn't really have that relationship with them. And it came to about a week and a half out from closing, and I was figuring everything out, getting everything straightened up, and it turns out title didn't have any transaction, nothing on record from the lender. They had no paperwork from them at all. They assumed, like, besides the contract itself, I mean, they said, well, we thought it was a cash sale because we haven't heard anything. We haven't gotten a call. We haven't gotten an email. Nothing at all. We're a week and a half out from closing. That's a terrible situation to be in. We had to extend it out. Had to jump through a bunch of hoops because of it, because she wasn't in contact with that lender, and it was a smaller amount. So you really want to be. That's kind of a big thing. And in talking about that as well, I'll kind of go into Justin's spill about clients that you'll try to keep and maintain. It's the same as real estate agents as it is for loan officers. Right? If you have, kind of the world we live by is generally you like to have 4 at most 5 clients that you're dealing with at a time. This is because, Stefan, how many clients do you have right now? Are you dealing with?
1, 2, 3 at the moment, but one of them takes up a lot of my time.
Yeah, he's like, they are worth 2.5.
Yeah, they actually know. I've been dealing with this guy for so long. When I send Jake a new contract, he's like, "Is it Charlie?" Sorry, no, I won't say the name.
Take that out.
But he's like, "I know who it is, and we'll take the loan." But he's getting upset because he's losing money because of this guy. And sometimes Justin even told me that sometimes your client will go to a lender that you don't know, and he's actually had it where it's ruined the deal because he'd be like, he sent the stuff to the lender, and then 3 days before closing he calls and the lender hasn't even started the loan yet. So it like we're saying, it's good to know your lender, but because stuff like that can happen and it can ruin a deal.
Yeah.
So if they pick their own lender, would you ask them for the lender's information so you can also get in contact with them?
Yeah.
You would definitely want the lender's information, and you would want to be in regular contact with him.
Yeah, as a buyer's agent, I typically, I'm working through a deal right now, and I call the lender at least once every other day. And I called them, it was yesterday, and we didn't even talk about I just asked if everything was going along, if we're still doing all right. He said yes. We probably talked about that for 30 seconds. Then we talked for about 10 minutes about just kind of what was going on. And what our plans were for the weekend, that kind of thing. It's really good to have, and that's not a lender that I typically deal with. This guy's actually based out of the DFW area, so I don't think I'll be working with him a whole lot. But it's always good to have those connections, anywhere you go. You just want to build that rapport with everyone you meet. Yeah, kind of going back to the number of clients that you hold, it's the same for real estate agents. I currently have 3 true clients that I'm working with right now, and then a 4th that's kind of teetering on the line. I don't know if they're legitimate or not. So, and with them, it's kind of the same thing. I definitely put them off to the side if they reach out to me, but I'm in talking on the phone with another one of my clients. I mean, I've definitely sent them to voicemail and let them deal with it. Because, you're going to this is an occupation. This is a job. You're going to go where the money's at. You're going to go with somebody you have as a for sure client. So I would definitely say we say maximum of 5 clients at a time. I've been in a situation where I was dealing with 6, but 2 of them were leases. Which is a little more simple than an actual buy or sell of a house, obviously, since you're just talking about a year-long lease, trying to help somebody find a place. Yeah. Yeah, of course. Yeah, once you get access to the MLS, it's a great tool to use. It's especially in this area with how many college kids there are. I just sent a group text out to my buddies, and hey, anybody wants me to help them sign this year, I'll find you a more dope place, maybe even a little cheaper, and you make typically 25% of the monthly rent on the whole year.
The first month's rent.
So if it's $2,400, $600 for each one you sign. That's a house of 4 at $600 a piece a month. Yeah. So Sorry, go ahead.
I was gonna say, you can do, if you actually do leases, you can actually make some good money just by doing leases, and because you can do them super quick. It's not like a contract or transaction like that. It's easy. You just put in an application, and then it either gets accepted or denied, and you're done pretty much.
It's super easy. It's typically once your clients decide on, yes, this is the place that I do want to stay.
Finding the place is the hard part.
Yeah, finding the place is the hard part, but once they do decide, it's typically around a day. I've had some where I had them fill out forms and I sent it in for them, and they either got accepted or denied. Or I've also had cases where, and this situation was with my brother. It took me forever to find him and his friends a lease. It took us probably 3 trips out, going and looking at different places all around town, and they finally decided on one. And the place they decided, all I had to do was call the agent, give the agent all of their email addresses, and then they dealt with them completely separate of me. So all I had to do was show them the place, and then provide the email addresses. I got 25% of that month, of their rent for the first month.
Does that go for apartment complexes and hard-code MLS?
They will have different terms, most likely. Stuff like the barracks or Holloman Crossing or the cottages. They're so big and well known, they don't have to put their stuff on the MLS. The barracks actually does do quite a bit on the MLS because they're privately owned by investors, so they do a lot through the MLS. But Holloman Crossing, I've never actually dealt with any of those, so I couldn't tell you specifically. That'd be something to ask Justin. I'm sure he would give you more information on it. But you'll definitely still get a referral fee. Bringing them business throughout the year, they're definitely going to get a nice referral fee for it. So, that was kind of a long tangent that we got off of talking. You want to keep around 5 clients.
Yeah.
But it was good information. That was one of my best tangents ever. I actually was able to talk about it.
If you have 5 clients, you're busy. You're very, very busy.
Yeah, you're going to be locked down all day, especially when you get the $300,000 to $400,000 client in that range. Once they kind of hit that, they expect a lot of time. They expect a lot of effort, and they expect a lot of dedication. And
you better answer your phone. That's awesome.
Yeah, answer your phone. Be next to your phone all the time. Keep the ringer on. I used to never have my ringer on my phone. Yeah. Never. And now I have it on 24/7 just because I got to see who's calling. If it's one of my homies, then I'm probably still not going to answer it. But if it's a client of mine, guaranteed I'm going to be picking it up and talking to them, seeing what's going on, how their day's going, and how I can help them. And talk about, just kind of hopping all over the place here, because we got institutional lenders. Let me to the next one. And then we got non-institutional lenders, and these are the 2 slides for today's chapter. So, great. Mortgage brokers and bankers. When talking about mortgage brokers and bankers, People tend to think they're the same thing. Mortgage bankers are actually they're agents of the bank that they work for. So if you're a mortgage banker for Chase, then you'll know Chase's loan application status, the requirements, and the services and products they provide through their loan company. They'll know like the back of their hand. Whereas mortgage brokers are typically they don't have a specific lender that they work with. I know Justin has his mortgage broker's license. He doesn't really practice that anymore, but when he was saying, I was talking to him, and he was saying that when he did practice, he could have told you probably 15 to 20 different companies and over 100 products that all of them offered, and kind of the restrictions and requirements that they had. So mortgage broker is definitely different than mortgage banker.
What is the difference in their job descriptions?
Job, I mean, it's the same. It's the exact same thing. Banker is just with one company, and the broker can broker through all multiple companies.
Oh, okay.
Yeah,
That's what he was talking about, that 2-week course for being a broker?
yeah. And I don't know if he was talking about. Yeah, I mean, I guess it would have been because I was talking about his mortgage broker.
It might have been insurance. I don't know.
Yeah, I don't know. He has so many certifications and taken so many classes. You're like, I don't know. It could be this one, but it could also be any of these other 47 that he has. And then real estate investment trusts, real estate mortgage trusts, and hybrids, as well as real estate bonds. You can borrow against those. These are not very. We don't go into a whole lot of detail on these. As we're talking about, when you start talking about real estate investment trusts, that kind of thing, you start talking specifics, it's a no-go. So it's just, again, the general idea that you want to know that you can offer these, but it's not required. Sellers or family. I've been in a situation selling in a home buying sense where the loan kind of fell through for the buyers, but both parties still wanted to move through with the property, and so we kind of considered briefly sellers. It was basically seller financing, and we talked about that quite a little bit last class, and that's just where obviously whoever's selling the property doesn't need the money right now, doesn't need it right away, so they'll obviously give up title, give up whatever. And then you'll pay that mortgage to the seller. And that's really good. If you can afford it as a seller, that's really good because, as we said, the going rate around here is about 7% interest, which is obviously almost double kind of what the average is for a conventional loan. So, and if the buyers are up for it, by all means, I would recommend it to sellers because you're going to make a lot more than you would have in the first place.
I know 2 people that are sitting at 10%.
Really? Doing seller financing at 10%?
They're paying for their homes at 10%.
That's rough.
Yeah.
That is.
I saw their statement. I'm like, you're literally $10 in principal,
Yeah.
and their monthly payments are like $17,000 a month. Which is like, that is insane. Like,
Yeah.
I could never.
No, 10%. That, and then, the crazy thing is interest rates like right now we see 2-3%. It's typically around the 5 to 6 range average. But yeah, like we talked a little earlier this week in the 90s. They were 8, 9, and 10. And got up to around that threshold of 12%, which is that's really scary.
It depends on how the economy is doing. It depends on the interest rate that you're offering on the bank.
Yeah.
So if the economy is good.
Apparently the rates just went down.
Also, the economy is bad.
Yeah. It's hard to talk about interest rates and kind of the effects on them and what does affect them right now because we're in such an unforeseen circumstance due to COVID and all of that. Yeah, it's really hard to give a solid explanation as to why everything is the way it is because obviously there's a lot more that plays into it than just there's a virus going around. There's quite a bit that goes into all of this. So, but another way you can do it is through family. I've heard of instances where a client was wanting to buy a house and she didn't have the money, but her sister and her husband had money, and so they bought the house for her, and then they paid her back. So you can also do get lending from there. Private loan companies, you can tell your clients about this. We highly don't recommend it. I mean, we recommend you don't tell clients about it because this is kind of where you get into loan shark territory. People who are just out to make as much money as they can and don't really have any consideration for the people that they're loaning to. So they charge them insane interest rates that aren't regulated by the government, sometimes at 25% insane rates. It's kind of like they kind of are the same as those payday loan people. And charge you insane rates that, I mean, you're never really going to be able to get out of because it's just so high.
Like Quicken Loans?
Yes. So we try to stay away from those as much as
Just in
possible.
case, Quicken Loans.
I know somebody that got a Quicken Loan, mortgage loan, and I was like, why? They're like, well, they respond to us real quick. Of course they're gonna respond to you real quick. It's like while they're out for your money. Like, I can't even imagine the amount of interest that they're charging.
Yeah, there's
All of it.
insane.
100%. The loan will never end.
Yeah, it really never does. Some people, when the rates get above 15 up into the 20% range, it's hard to come out of. It's hard to buy your way out of it. It's very, very
win the
expensive.
lottery.
Yeah. So another non-institutional lender, foreign lenders. I've never had to deal with that. I've never heard of anybody having to deal with that. I did have a client who I heard was from Russia and was trying to get the lending from Russia because that's where all of his money was. I didn't ask too much about that process or how it went though because I just wasn't all too interested at the time. And
I'm sure it's extensive.
yeah, I'm sure there's a lot of hoops to jump through, making sure it's all clean money, I'm sure, and all kinds of stuff. So I haven't really dealt with that, but it is an option or a route that you can take. Some instances where, why you come in and you want to buy a house and you walk into our broker, or say, somebody off the street, Joe walks in and says, hey, I want to buy a house, but I have really, really bad credit. Can you help? Well, 99% of real estate agents, what do you think they're going to say? I have really, really poor credit, like in the toilet credit, bad. And I really want to buy a house. Can you help me?
Probably.
Yeah. Majority of agents are going to say no, probably not. Well, I mean, here specifically, and just in general as an agent, well, I mean, refer them out to a credit repair company. Thankfully, Justin has his credit repair license. There's another one.
You just send them right down the hallway.
And so, yeah, we tell them, well, it's all right. Our broker here, he's a credit repair specialist. We can see if we can help you out there, talk with some lenders that we know, and we'll see what we can, work out and get you in. This business really, what it comes down to is like I said earlier, how nice you are to people, how well you treat them, and then being a problem solver. That's a huge part of it. You're gonna run into issues. Stefan, just on your way out, have you ever had a smooth transaction? Oh, you're sitting here.
No,
Has anything ever gone smooth?
I've never had a smooth transaction yet. It would be nice, maybe someday, but not yet.
I'm gonna be honest. I've had one smooth transaction, but it was for a very, very small piece of property without a house on it. So I think that's why it was relatively easy.
Actually, I did have one, but it was a lease.
Yeah.
It wasn't an actual, full-on.
An actual transaction. Yeah, actual transactions. I mean, there's really nothing smooth about them. You're gonna run into a problem all along the way. I mean, I've had numerous problems walking in trying to show people houses. Just doing showings. I've had crazy things happen. So, I mean, you're gonna have to be able to think on your toes, kind of a little bit, and just be a problem solver. And if you can do those two things, you will be successful. Talking about real estate agents, or we don't get paid hourly, obviously. We're paid by, do you know what it is? Commission, yeah, we're commissioned. So we don't receive W-2s at the end of every year. We receive 1099s. And if I were to go to a bank and request for a loan with my 1099s, I'd be denied. I don't have for sure substantial income. You know, I can have $2 million in the bank and only want 200,000, but there's still some banks that won't allow me to get a loan because I'm a 1099. I'm a
Unreliable.
yes, unremote. God, I thought about that. I don't know what was going on. My chest just like tightened up right there. We're independent contractors, so there's no telling. You know, our income can vary at all times. So you know, and there's all kinds of people who are self-employed. So somebody comes to you and says, "Hey, I really want to buy this house. I'm self-employed, but I can't get a loan. What should I do?" Well, again, most agents are going to say, "Sorry, boss. I mean, you're out of luck. I don't know what to do. I can't help you there." But as you know, we can take out what is called bank statement loans, and some mortgage companies, not all of them, but some of them offer what they call bank statement loans, and you'll give them your bank statements for the past 1 to 2 years. They'll kind of add everything up, go through everything, divide it out by 12 or 24, how many ever the months, and they'll go, okay, this is like their average income on a monthly basis, and they'll give you a loan based off of those. So there's all kinds of, you're going to run into a lot of problems just in general in real estate. So that's why, we don't want you don't need to know everything about everything. You just need to know a little bit about everything. You need to be able to apply, kind of this stuff and be able to problem solve fairly quickly. And yeah, so those are our 2 slides for the day. This is a great time. I'm sorry to do this, but we do have another video. This is another informational video like we did yesterday, the test prep site, off the test prep site. He's talking with, these are specifically to do with financing FHA, VA, and conventional loans. And it goes through actual questions that go on the national exam and the state exam. Kind of skips through the intro so we don't have to listen to their intros at all. He's going to get right into the questions. And yeah, I would highly recommend you not only now pay attention, but when it comes to taking your test. The one thing that I can advise you is to, just take as many practice tests that you can. And I took 4 before my actual exams, and on every single question throughout those 4 100 question exams, the ones that I got right, I didn't go back over again because I knew the material at that point. But I could have gone back through right before I took my test and after I took my test, and I could have told you why I missed every single one of the questions that I did miss and why I was wrong. And that's really what prepped me for the test. So, I know these videos are boring. I know they're hard to watch. But I do recommend that you watch them because they are very informational. They're very good. And this is very similar and accurate to what you will see on the national and state exam. So, with that being said, this is really good. His name is, I think it's just, Prep Agent on YouTube. So obviously you don't have to go this weekend. You don't have any tests coming up. You don't have to go watch any of his videos. But, before the finance test, well, it'll be in 2 weeks since y'all just took that test yesterday. Just go watch a couple of his videos and see if anything that he said helps you at all. And if anything does help you, please feel free to share it with your classmates because me and Stefan know how tough and agonizing this class can be. So it's always good to help your classmates out. But if you don't mind throwing that video on, get right into it.
Just ask me a question. You asked me a question. What are the differences between FHA insured, VA loans, and conventional loans? Like me to start this party, or do you want to start?
You start.
Okay. So first off, ask something really basic, okay? A loan. Oof.
Money borrowed.
Yeah, money borrowed.
Okay. I'm looking for a word that starts with an L and has 4 letters. Lien. A loan is a lien. Okay. Have you ever heard that word before?
Oh, yeah.
Okay. What do you know about that word?
It's purple.
There's voluntary liens, involuntary liens, and I guess a mortgage is a lien, and so it's a voluntary lien.
Good. So it's a voluntary lien. Is it general or is it specific?
It's specific,
Why?
because if you don't pay it, they can come back and take your house, and that's one specific thing that they can come take.
Good. You clearly been studying. You're ready to go. What would be
We
example?
have that.
Yeah. What would be an example of a general lien?
Like a judgment lien where you go to court and you haven't, you have them, as a defendant, you're required to pay some kind of restitution or something to somebody, and they say, well, we're going to take everything until you're paid up.
Okay, so you got that general lien, you got a specific lien. You said that they could take your house, right? In a specific lien, you get a loan, correct? That sounds horrible for the bank, right? What do they do to prevent that? So they give you a loan, they're like, you know what? We're lending you this money and we want you to pay it back because we don't want to do this whole foreclosure thing. That'd be horrible. But we're a little nervous. We don't know you that well. We know you well enough. We want to lend you the money. We don't know you that well. So what's the bank going to do?
Put money down.
Okay, good. There's
Or some people might have to pay like mortgage insurance, like primary mortgage insurance for people who are like maybe a risk factor.
good. So if you guys, now what kind of loan is that?
What kind of loan is what?
What you're talking about, where you have 20%, you have to put money down, and there's no, a conventional loan, good. Which maybe I could have phrased that better, but you hit it perfectly. Where we're going with this first is conventional loan. So what are the difference between FHA insured VA loans and conventional loans? So that little blurb leads us to what you just mentioned, a conventional loan, okay? And these are things you should not only understand for your test, but it's also important for when you practice real estate. You guys probably heard that thing where none of this you'll ever use. You'll never use any of this. You heard that before?
Oh, yeah.
Whoever says that, I hate them. Never talk to them again. They're horrible people, okay? Because one, in no way does that motivate you to study, correct? In no way does that help you want to learn. And two, they don't know what you're talking about. If you're going to do real estate, and I'm going to hire as an agent, and I ask you as my agent, what's this conventional loan thing? And you go, I don't know. I only need to know it for my test. I don't really need to know it now. Does that make you a really good real estate agent?
No.
No, I would like to know, you don't have to be an expert on this stuff, but you should know what it is. An FHA loan, conventional loan, all this kind of stuff. So if people say this stuff's not relevant to your exam, please don't listen to them. Just take it as it is, because this is a great example of something that is relevant. Got this conventional loan. What is a conventional loan?
It's like from a private institution, necessarily government backed. Again, kind of a 20% down scenario, usually.
Good. So Laura, read what I got on the board here.
Conventional mortgage refers to a loan that is not insured or guaranteed by the federal government.
Good, Matthew, that's essentially what you just said, right? Yeah, so you got that down. Okay, this means that unlike federally insured loans, conventional loans carry no guarantees from the lender if you fail to repay the loan. So what do they do to make it a little safer for them?
Where they require the primary mortgage insurance?
Yep. For this reason, if you make it less than 20%, so people hear this 20% down thing a lot. 20% is there for what?
I guess to like start with some equity.
That's a good word. There's another word I was looking for that comes up on your exam. The word leverage.
Yeah, okay.
What do you know about that word? So I'm going to try and work in words. What I want to do is, you guys clearly have a good understanding of this. I want to try and take your understanding and really make it specific to the exam. Good?
Right.
Okay, so you heard that word leverage before?
Oh, yeah.
What do you know about that?
It's just like your, I don't want to say collateral, but it's like what you have to give you leverage. It's like, you use the money that you borrowed
You're
to
leveraging somebody else.
finance your investment.
Yeah, you're leveraging somebody else's resources. But in doing that, you're risking their money. To do that, they'll say, we'll lend you some of the money, but you got to put 20% down. And you used a word I like. What was that E word you used?
Which?
Equity.
Oh, equity, yeah.
What's equity?
It's money that you have you've, I guess, gained from the property, either by paying down the loan or the value of the property rising.
What I like to say is equity is the money that after you sell your house, you go buy a cookie with. It's the stuff that's physically going to be yours when the house sells. Okay. So what's private mortgage insurance? You guys know about it.
So that you have to pay private mortgage insurance. I think it's until you get 20% down, right? You have to stop paying it at that point. But I guess it's like basically to insure your loan, right?
Yes. Ashley, why don't you read what I got on the board here?
Private mortgage insurance or PMI policies are designed to reimburse a mortgage lender up to a certain amount if you default on your loan and your house isn't worth enough to entirely repay the lender through a foreclosure sale. Most lenders require PMI on loans where the borrower makes a down payment of less than 20%. Premiums are usually paid monthly and typically cost around 1.5% of a mortgage loan. You can normally cancel the PMI once your equity in the house reaches 20%.
Right, which is what you were saying just now, right, Laura? Yeah.
He just said it much nicer.
No, but you said, I mean, that's not fair. Because I had a chance to think about this. I'm writing this on the board here for you guys before we get on the phone, whereas I'm questioning you. But you clearly have a good understanding of it.
We're trying, so.
Now, you guys are nailing it. I mean, I almost feel like you should teach this, not me. I'm just walking it through, and you're just reciting what you already know. Okay, and
Wow,
so.
you're super nice to say that.
Yeah, yeah, I guess I am. You're right. No, you guys really do know. You know what you're talking about. Okay, so for this reason, if you make less than 20%, when you guys practice real estate, this goes back to what I was saying about what you study for the exam is relevant you're going to practice. You'll hear a lot of this 20% down thing all the time. Okay, you'll hear about it a lot. And this is what they're talking about with PMI. Okay, and not only for your exam, but you're going to have to recite this whole thing when you have your first buyer of 20% down. Tell them if you put less than 20% down, you have to make PMI. So if you can get 20% down, that'd be great. Okay.
Oh, yeah, okay. Yeah. Actually kind of all the way around there, yeah.
Yeah. So, loans must adhere to Fannie Mae. Okay, so Freddie Mac and Fannie Mae. You guys heard of them? Now we're getting a little more difficult. What are they all about?
They're people in the second, or not people, but in the second mortgage market that buy loans.
By government institutes purchase, and Fannie Mae purchases or can purchase FHA and VA, correct?
Yeah, so I want to stop you for a second because you mentioned something really important. You said the word secondary market. What's that about?
I mean, they buy the loan, say, from the bank.
And then there's investors who give them money, those loans.
If I
So
was,
basically,
ready for this, if I was 10 years old, how would you explain that to me?
I would tell you that there's
So here's words that you could use to really make this easy. And I want you guys to narrow down your knowledge. You got a lot of knowledge. So when we get off our call, I want you to really practice, take your information and narrow it down to 1 or 2 words. For example, secondary market, resale marketplace. And this is the way I explain it. You guys have it nailed down pretty well. I would say I have $10, right? I make you a loan, okay? Laura, make you a loan for $5. Matthew, I make you a loan for $5. Great, right? What's the problem? Give money to anybody else. I'm out.
That's right.
So Fannie Mae will now buy that loan, the secondary market, excuse me, go buy that loan, and then I'll have money to lend to somebody else.
Okay.
Yep.
It's that simple. And I really want you guys to try and simplify as much as possible, because now you kind of nail it down, but as you know, when you take your exam, you get a little nervous. And you want it as simple as possible. Do you guys know the history of the secondary market?
But actually, maybe you pinned some of it down yesterday, listening to one of your other webinars.
Yeah, actually, I did a video about it. Do you want to go, or I'll give you a quick history, or do you want to try?
It was after the Great Depression and banks collapsed, this, that, and the other, that Fannie Mae was created to basically kind of pump the banks back up, and that's where they kind of started loaning kind of on low interest rate loans, as well, you know, being able to put down a small amount of money. Our homeowners could be able to put down a small amount of money. It was all federally backed at that point, instead of the banks taking all the risk there.
And you guys can study. You guys will do great. Yeah, so secondary market, 1934. What was happening in 1934?
Depression.
Right. The 20s was what the roaring 20s, Babe Ruth's hit and run, swing dancing, all that kind of stuff. Everything goes up, must come down. Okay?
Right.
So 1934, Great Depression. The only people who could buy homes were people who were really rich, because you need these massive down payments. And, you know, they had these like 7 years, to pay things back in 7 years. So you need a lot of money to put down, and you need to be able to pay back some crazy interest rates. So it became a country of renters. The poor got poor and the rich got richer. And eventually the government said, we can't continue like this. So they said, hey, you got to lend people money. And the banks were like, we're not lending money, we never get it back. Up came the FHA. The FHA was there to say, hey, if we back you up here, if these people qualify, we'll make sure you don't lose any money. They started lending money, but they ran out of money, and then the secondary market came to purchase those loans. And without getting more detail, I have a full video on it, which you referenced. Just Google secondary market prep agent, you'll see it. Sounds like you guys got it nailed down pretty well. Yeah, Fannie Mae and Freddie Mac are there to buy those loans in the secondary market. Okay, but first we're talking about the conventional loan. The conventional loan is that mortgage loan you get your average home buyer who doesn't get it back, which leads us to FHA. What is the main purpose of FHA? And this is big. People get this wrong all the time.
I want to say that it would be insured, be like the benefit of it, but I don't.
So can I go?
Yeah, go ahead.
Can I go get an FHA loan?
Yes.
Does that mean that FHA is making me a loan?
No. You don't actually go directly to the FHA. I mean, it's just a.
Insured by the FHA, but it's a private lender.
Excellent. Good. Perfect. Make that mistake all the time, because in everyday vernacular, people say FHA loan, where it's actually an FHA insured loan.
Right.
And in everyday speech, people say FHA loan, and then what happens? People take their test, say, oh, get an FHA loan. You're not getting an FHA loan. You're getting a loan insured by the FHA.
Right.
Right? And we said FHA is created in 1934. There's very few dates you'll have to know for your exam. Then maybe 1934, one you definitely have to know. Show off, right? Yeah. 1968. What happened in 1968?
a lot of stuff, or what have you.
The 13th Amendment of the discriminatory.
Okay, well, the 13th Amendment didn't happen in 1968. That happened after
Well,
the
no,
Civil
but it
War.
was,
But
right. But the anti-discriminatory act, I think was it fair
So-
housing,
Yeah, from the civil rights movement, or what have you, came that.
so here's what I love that you did. Just like, I don't know what you're talking about. I just know 1968. And that's perfect. Because you'll get it right in the exam. And you have to promise me, no matter what it says in your exam, I don't even care if it asks your birthday and you're born, whatever. If you see the words 1968, you circle 1968. Promise?
Yep.
The answer will always be 1968. I don't care why the sky's blue or you know, what year did man hit the moon. Just circle 1968. Whatever the question is, if you see 1968, circle it. Okay?
Will do.
Because that's a big one. All right? If 1934 and 1968 are in the same question, well, then make me a bad review. But until that happens, go with it, cross your fingers, and trust me. Okay? If so, we do know what it is. 1968, which you guys are alluding to, was federal fair housing. Federal fair housing happened in 1968. There's a court case of Jones versus Mayer, which is based upon the 13th Amendment. And the 13th Amendment was the one that abolished slavery. And this is what I go back to about you guys know the vocabulary. You guys clearly know a lot of this stuff. But I feel like you're one of those people who've overstudied a little bit. And no, there's no problem with that. It's just, it's time to narrow down to those key information. So you've got all this great information. It's like, well, let's focus it down a little bit.
Right.
And you can do that with that vocabulary. So our housing 1968 was, right, it was a week after Martin Luther King was assassinated. It was April 7th. The federal fair housing was passed April 14th, 1 week after. It's not just for your exam. 1968 is a huge year in American history. It's one of those we kind of should know
Yeah.
just for life. It's probably one of the more important years in our country's history. 1934, FHA. Okay. I get an FHA insured loan and go buy an office building.
No.
No. What can I get with an FHA loan? Residence. What's a residence?
family home.
Yeah, like a single family dwelling. And yeah, like what you have here, whatever, 1 to 4 unit residential. I mean, that would be like a, you know, a quadplex or something along those lines.
Right.
Would
That's what
they
you
qualify for a FHA loan?
Yeah. 1 to 4 units. And that's what I was getting at. Like, it all sounds when I say family. Basically, what we're talking about is 1 to 4 units. Okay? When you guys, at FHA, there's limits on what you can get, right? Can you get a multi-million-dollar home with an FHA loan? The limit.
No, the limit actually, but it's isn't like an FHA loan kind of basically for you know, kind of unqualified buyers to some degree.
Some degree. So basically, when they ask about limits to FHA loan, as per your region, you guys from North Carolina, and I put the link on the board here. So it says learn more about FHA loans. You go to FHA.com. You see this website down there? And you go to North Carolina, it looks something like this here. Let me see if I can, you guys what it looks like really quick. What do you think? And it would look, something. You guys ready? Drum roll, please.
All right.
Look, something. Okay. See that?
Mm-hmm.
So if you go to the FHA website and type in North Carolina, you'll get to a page that looks something like this. See how it lists? And one thing I'll notice, you said it's 1 to 4 units, okay?
Uh-huh.
And by the way, this is true for any state you go to. You go to North Carolina, but then it lists your county as well. I don't know what county you guys are in, it lists all of them. But you notice how it says single, duplex, triplex, and fourplex. Why does it say that?
Cause that's what it's up to, is the
One to
single to four.
Yeah, 1-4 units. Okay. Now the other interesting thing, and by the way, this is a screenshot off of the website, just so everybody knows. So this is nothing that you can't look up. This is not special to me. I literally took this screenshot while we're doing this right now. So this is nothing that you or I or anybody listening can't look up. You see on the top bar of the image.
It's a private company, it's not a government agency, and does not make loans.
It does not make loans.
All right.
Okay. So once again, this stuff's relevant to what you're actually going to do, right?
Right, yeah.
Yeah. And other reason I showed you this is to take what you're learning and put it in very real terms. So hopefully you guys didn't mind that. Moving along, VA loans. What do you know about VA loans?
They're for veterans or veterans spouses too.
Well, here's what needs to qualify for it. Remember, a veteran, National Guard, or eligible surviving spouse, which is what you just referred to. It's a big doozy that comes up with a VA loan. Can you get an FHA loan with no down payment?
Yes.
No, it's
Down payment.
Yeah, you need a down payment for FHA loan.
VA,
VA, no money down. That's a big one that comes up.
Okay. No private mortgage insurance required.
Well, that's where the VA comes in. And the FHA didn't have private mortgage insurance either. That was at MIP.
Okay.
Right.
This is how you get home buyers and sellers through social media.
You asked me quickly about statute of frauds. What is statute of frauds about?
The statute of fraud, I think, is kind of specific to North Carolina, but it's
That's a national thing.
it's not.
Yeah.
Oh, it is, okay.
Everything we've gone over today, by the way, this is all federal stuff. FHA, VA, that's not specific to any states.
I guess I thought the statute of frauds had to do more with North Carolina, because I thought it was talking about like the contract law kind of.
Still, majority of the stuff that you learn applies to every state. People talk about state specific, but statute of frauds has to do with writing. Statute of limitations has to do with time. It doesn't change. The things that gets a little changing from thing to thing is what is that time? Or sometimes what needs to be in writing. That may change state to state. But the idea that statute of frauds has to do with writing, the pure definition of these things, that doesn't change. Make sense?
I think that the reason I thought it was North Carolina specific is because the things that I have missed on our in-class assessments have all been things where I'm like, oh, well, in North Carolina, it's like this. And so I'm tend to be missing the contract law pieces, I think, that are from North Carolina specifically.
Right, and that may be true, but this isn't one of them. This is a very federal type thing. Okay. They'll ask you a lot of stuff that applies to every state, but it applies, even they'll put the word North Carolina in front of it. Want to do some questions?
Sure.
Mm-hmm.
You nervous?
Very.
Okay. You guys are a couple, right? Do you competitive with each other?
I am probably more so.
Definitely when it comes to this, yeah.
All right, get on. Here we go. First question. Here's what we'll do. One of you read it out loud, and then we'll see if we can do this. Who wants to read this one out loud? Okay.
Why would a lender be interested in making a government-insured or government-guaranteed loan over a traditional conventional loan? A, faster repayment. B, lower risk. C, easier qualification. D, faster foreclosure. It would be a lower risk for the lender, correct?
Laura?
The That was the same thought.
Boom, good. Okay, so we have a lot of these, so we're gonna go through those. So if you know them really well, I'm just gonna keep going, okay?
Perfect.
It's lower risk because the government's backing it up. Okay, Laura, your turn.
Okay, the primary activities of FNMA in the secondary market involves A, FHA loans only, B, all types of real estate loans, C, government insured and guaranteed loans, or D, second mortgages and trust deeds paid up to $20,000. I say B.
C,
Okay.
Fannie Mae.
Uh-oh,
Yeah.
Laura, you're winning.
Oh no.
Yeah, so Matthew, Laura, why'd you say A, Matthew, why'd you say C? What do you guys think? What's your thinking? So you can get.
Well, I know there was more than just FHA loans that they, because they also guarantee VA loans. And, so that was the only other one that made sense, honestly, C.
Okay,
I chose,
And it's not, all types of real estate loans because they don't do commercial or
right.
non-residential.
One of the things I liked you did is you were very careful about what I like to call absolutes. Absolutes are words like always, all, never. Prefer words like sometimes, usually, possibly, right? Because there's always an exception. So one thing you did here is you were going through the question, you saw the word all, right? And you were like, I'm not comfortable with that. There are things there's no exceptions, but typically when you talk about law, there's an exception. That's why we have lawyers. They get paid a lot of money to essentially find the little exceptions in the rules. So you did a good job there. So Fannie Mae, the primary activity of Fannie Mae in the secondary market involves government insured and guaranteed loans. Laura, you all right?
okay.
Okay. Whose turn?
Okay. That's fine. Under the statute of frauds, in order to be legally enforceable, all real estate contracts must be A, on a government-approved form, B, drafted by a lawyer, C, a unilateral agreement, or D, in writing.
I'm gonna go with B, drafted by a lawyer.
I would say B.
What do you think?
I would say B as well. I know that we can't have to.
In writing, that's the whole thing about statute of frauds.
Except for the under a year.
Right.
Yeah,
That's
and I went with D. Yeah, I went with D just because I didn't think that, brokers were allowed to have a contract like that or what have you. I know that you can make changes to it, but I thought they had to be drafted by a lawyer.
Well, let me ask you this. Is statute of frauds just about real estate?
No, yeah, you're right.
So you think of this, this is a much more general term. You're getting into specifics of how it functions within the world of real estate, of which you may or may not be right, but that becomes irrelevant. Because what they're talking about is a much more general thing here. Statute of frauds just must be in writing. That's all it means. And that applies to things way above and beyond just real estate. The specifics of how it functions in real estate is a different deal. And that's what I meant by things may differ from state to state within that realm of what needs to be in writing, how that works. But the word statute of frauds itself just means writing. Does that make sense? And this is kind of what I was referring to where you went, where I said you might have overstudied a little bit. Because, this was a perfect example where you went into all these details, thinking through all this great information you learned, where I said, hey, let's just back up and learn the vocabulary and know statute of frauds, writing, boom.
Yeah.
Okay.
Which of the following requires a CRV? It is A.
Yeah, A, B, A.
That's it, man. Good stuff, guys. Certificate of reasonable value is issued by the Department of Veterans Affairs. setting forth the property's current market value based on VA appraisal. That was great. Didn't think you guys could get that right. You guys definitely didn't study it. Are you guys gonna like sell real estate together and be one of those annoying teams with both your faces on the business card, like smiling at each other, like yeah,
With like glamour shots? No.
yeah, like the glossy '80s glamour shot with the poofy hair and the guy with the mustache, and you guys are all like happy together. You know, so,
No, that's not the plan.
I am.
yeah,
A bunch of cats and dogs around me.
yeah, there you go. I mean, that's such an ego trip when people do that. As I say this, I have my face on every YouTube picture, like on the internet, right? I mean, what a hypocrite I am. But
So you're a hero in our house.
the hero. No, that's about your house. You mean you two?
You are definitely in the like celeb status here.
Thank you, I appreciate that. My mother would be proud.
Good.
Okay, so get the pictures when you guys pass, but just don't do the glossy thing and don't do the benchmark act.
Okay.
Yeah. Okay, next question. Right. You guys are gonna get this one. You can read this one out loud though for people listening though.
Which of the following would not require a down payment? A, bedroom, housing,
Okay.
the outlet. A B, FHA, C, VA, or D, conventional?
The answer is C.
Yeah,
Okay.
C, a VA loan.
Next hint for your exam. If you've never heard of it, don't circle it.
Okay. Yeah.
Why is that?
Because it's probably not the answer if you haven't heard of it.
Which is why when we started this, I said, do vocabulary and not the questions for your exam. Excuse me, don't focus on practice questions. It's now you would have seen that it's not correct information, and I've heard of it. You've heard of bad information.
Yeah.
Yeah,
Where
right.
you think the vocabulary, the only thing you're learning is correct information.
Yeah, no, that's true.
So this kind of emphasizes that point of why I said, you know what, please just in these precious hours before your exam, stick to the vocabulary.
Yeah, very understandable.
Yeah, and hopefully that kind of explains that point a little bit because you saw, like, I've never heard of it. Well, if you keep doing questions and going through every answer, you would have heard of it, and then it's a problem. Okay.
Okay. All of the following are characteristics of VA loans except A, used for housing or farm property. B, lower interest rates than conventional loans. C, okay to use for the purchase of rental units. Or D, guaranteed by the VA. I feel like C.
Yeah, I think C as well. You only get one chance, or you only get one card. What is that?
Expand upon what you were saying. You're making a great point there.
Yeah, you only get one. You can only have one PA loan or what have you. I mean, you can defer it at some point in time and take it out again. It's only one at a time, so why would you do that for rental units? No,
Well, also, you're not allowed to get a rental unit.
yeah,
So basically,
yeah,
the VA's purpose is to say, you've served our country, very proud of you, and as a thank you, we're going to make sure you can have a home. It is not there to make sure you can have a big business and start some multinational company. It's there to ensure that the people who served our country, when they come home, they can get a loan so they have a place to live.
right.
Easier than if you're an average citizen. So that's the big thing. It's meant for them to have a home. Now, what is a home? 1 to 4 units. Go this way.
Was it my turn?
Yeah.
For FHA purposes, acquisition costs include non-recurring closing expenses. Which of the following would not be included?
Answer.
A discount point, B FHA appraisal fee, C credit report fee, or D impounds for property taxes.
this looks like a confusing question, right?
Yeah,
Can I simplify this one for you? Because it's actually much easier than it looks.
yeah, please.
This word mean?
Recurring doesn't keep happening.
Yeah, one-time deal.
Does this keep happening? One time.
Yes, one time.
Does this keep happening or is it one time? Does this keep happening or is it one time?
One time.
This one.
Yeah,
Yeah.
that keeps happening.
Every year.
Okay.
So you see how kind of when you look at it, and then when I actually broke it down here like that, you're like, wow, that's actually a lot easier than it looks.
No, I actually really appreciate that, especially because whenever there's a thing where it says like which one is not or except, like those questions trip me up. I have such a hard time because I instantly look for something that is, and then I get stuck on that answer. So I like to be able to do that. So I'm glad that you pointed that out.
Yeah, so what I was trying to do there is look for the key words. There's a lot here about FHA, points, appraisal. Well, what about our basic grasp of the English language, right? Not recurring. Okay, well that's reoccurs, that reoccurs, that reoccurs. Oh, well, that does not reoccur, this does not recur, this does not reoccur, and this does. Very simple.
Right.
You know what, honestly, even if I went like this, you'd probably get the answer. Because it's like one of those kids are doing their own thing. Which one's way different than the others? Actually, that's not fair. If I went like this, if I said, so what I mean, look for the keywords when you do these questions. That's all you saw. See this. Then you say, okay, take out the not.
Right.
Which one of these is different?
Or I'd say, which one's reoccurring? And that's how I want you to mentally see this question. So if we look at it again, to just test-taking techniques, you can start to cross things out like I just did. A lot better than you just trying to read the whole thing and go through it. So I said, okay, what word really sticks out to me here? This one does. But there's a not. Da-da-da-dum. Here's another word which is very scary that I'm going to throw out at you, okay? Love doing the exam. The term double negative.
Yeah.
It's a double negative. Negative, negative. Double negatives cancel each other out.
Hmm.
You take your exam, this is all you should see.
Yeah. That's
Right.
huge for me.
Right? And doesn't that make it a lot easier?
Yeah.
And,
Yeah.
and I really like doing this question with you is when you guys first looked at it, there's this feeling like, oh, wow, what's this all about? But when I broke it down, you're just like, okay, piece of cake, right?
Right.
And there it is. Non-recurring is only paid one time. And there you got your property taxes.
Okay. Yeah. Okay.
All right. All of the following are considered advantages of FHA financing, except a low down payment, long-term loans with lower payments, easy to qualify for, buyer is protected with FHA insurance. All of the following are considered advantages of FHA financing, except.
Matt, what do you think?
A B as well.
If the buyer isn't protected with the insurance,
Oh, yes.
the loan is protected.
That was a tricky one, right?
Oh, yeah.
And
Yeah, you kind of just,
FHA insurance, and you're like, yeah, FHA insured loans, okay.
yeah,
right. And so what was tricky for you here, okay, is you guys know also, oh, FHA insures lenders. That's totally right. It's protected by FHA insurance. FHA doesn't make loans, it insures loans. So obviously that one's fine, right? That's what you were thinking, correct?
Yeah.
yeah.
So what you
Keyword
did,
stuff, and
you saw this and you're like, that answer's great. FHA insurance, correct? What you missed,
Yeah.
the sneaky part they sneaked in was here. Because the truth is, the buyer's not protected. Who's protected? The lender. Exactly.
Yeah, the lender.
Yeah, so that's one of those sneaky ones, right?
And
Sneaky.
very sneaky. I don't like it.
Yeah.
Okay, who would be responsible for paying the 1% origination fee on the FHA loan? A, escrow officer, B, the seller, C, the buyer, or D, the lender. I believe it's D, the seller pays the origination fee.
And see the buyer. The buyer.
Yeah, the
Yeah.
seller has nothing to do with getting the loan. The seller's trying to sell their house. How you pay for the house, they don't care.
That's true.
Yes, anything can be negotiated,
But
but
the buyer is the one that's taking out the loan. They're the one that's going to have to
exactly.
help the origination fee. Yeah.
Right. And I say anything can be negotiated, going back to that thing of the rule about the absolutes, always, never. I guess you can negotiate, I'll get this, but you gotta pay my, origination fee, which I've never heard before, but anything's possible.
Joe, when you do the editing for this, can you edit it so I got all the questions right?
Yes, totally, that was my goal. Obviously, you didn't even have to
Yeah, that would
ask,
be perfect. Thank you.
right? I mean, come on, I'm even editing every time that he answered and in a little wah wah. Lame.
Great. That's
Totally
excellent.
gonna fail. Yeah, and every time you answer, like, oh my God, she's so smart. I am truly a better human being. Her voice, Then when Matthew answered, I'll be like, I just got dumber. Thanks, man. I just got dumber. Yeah.
Exactly.
You know, they edit all
That's
that.
what we're looking for, Joe.
There you go. Totally. Right? Yes. Matthew, our relationship's great. There you go.
No.
Okay.
There he is. Got the answer again. C.
Okay, here we go. What do you guys have the answer to this one?
Okay, a purchaser of a home 5 years ago is now interested in securing an FHA loan. A salesperson would most likely introduce the homeowner to A, a conventional bank or savings and loan, B, an appraiser, the FHA, or D, the Federal Home Loan Bank. I feel like it must be the appraiser, like they have to, I don't know, 5 years ago?
8.
Why'd you say A?
Going to get if they're looking to, obtain a loan, they've got to go through a conventional bank. I mean, granted, it might be an FHA insured loan, but they still have to go through a, accredited lender.
Perfect. So remember, I said, it says FHA loan, but what's it really? FHA insured loan. Here's
Yeah.
how to do this. Do you go to the FHA? No.
You got to go.
Yeah, what are you saying?
You got to go through a lender of some sort. So
You go, Matthew. Sorry, Laura, he got that one right.
I know.
He's doing great. Okay, here we go. Moving on.
all right, the practice of discount points on FHA insured loans is because the lender desires to equalize the yield on FHA loans to the yield on conventional loans, create a competitive environment between FHA loans and conventional loans, close the gap between FHA loans and conventional loans on the secondary market, or D, all of the above. They're all the same answer, so I'm going to go with D, right?
Okay, so that one's C. That one's a tougher one. It's all about their yield. They're trying to close the gap to make things a little better for the secondary market.
Yeah, okay. Actually, I could see that.
Did John go from doing 0 deals for his first 6 months to closing multiple transactions per month?
So I'm at the end of my questions. Actually, time is perfect because we've been doing this for an hour.
Alrighty, guys. Appreciate your patience with that, diligence. That's gonna finish up our class for tonight. Do any of y'all online have any questions for me? Over the course at all? Anything that's going on? Everybody good? Assuming so. Why are you good?
Got a couple of questions here.
Deal with it. I appreciate you all sticking through that video. And congratulations, we're done with 1 week of finance. So only one more to go. But yep, we'll see you all Monday. Have a good weekend. Have a good Mother's Day.